Yo, guy. So in this lesson, we are going to cover up how to draw or how to highlight supply zones and demand zones. You understand? So as you can see on this screen, I believe that you can spot uptrend. You understand? Because you can see high and we have low and we have higher high and higher low, meaning that we are in bullish trend. Then we should be looking to buy. We should be looking for buy opportunities. You understand? So how do we draw this demand zone? Because in uptrend we only buy from demand zone. Demand zone it is the area where a lot of buyers are interested in pushing the price upward. You understand? Or a lot of traders are interested in pushing the price upward. So how do we know that demand zone have been formed after break of structure? You understand? You can see this two candle, this first two candle. You can see, then you can see the first bearish candle or the first red candle. It was the last candle. It must be the last candle before the impulse move. You understand? What do I mean by impulse move? You can see this green candle. It engulfed the red candle, or it overtake the red candle. This candle, it is full bodied candle. You can call it maribozu or momentum candle or institutional candle, because this indicates that these people that we call big boys, the bank or hedge funds, are into the market. They are ready to push the price upward. You understand? So what are the criteria that we need to look out for before choosing demand zone or before drawing zones? You understand? Firstly, if it's demand zone, it must be the last bearish candle. You can see the last bearish candle, then you can see the next green candle which was printed bullish, full body candle, and it must have fair value gap. You understand? What do I call fair value gap? Just keep your fingers crossed. Let me explain. Yeah. All right. So here is the details of fair value gap. You can see in short form we call it FVG, or imbalance or inefficiency. You understand? So what's the definition of fair value gap? It is the space or gap between three candlesticks. You understand? You can spot this example here. You can see these three bearish candles. You understand? The first candle, the second candle, and the third candle. You can see that the first candle, there is space between these three candles. You understand? There is space that I labeled fair value gap. You understand? So that area, that space, it is called fair value gap. You can see this bullish example too. First candle, second candle, and third candle. You understand? You can see the second candle. There is space that differentiates these two candles. You understand? There is space there. So this space is called fair value gap. So there are some traders that trade fair value gap, but we are not going deep into fair value gap. You understand? Because we are not a fair value gap traders. We are only supply and demand traders. You understand? But in our strategy, fair value gap plays a lot of roles, in a lot of important role in choosing supply and demand. You understand? So this fair value gap, it must be on that zone. We will cover it up on live chat. You understand? We'll cover it up on live chat. So let me recap. Fair value gap, it is the space or gap between three candles. You can see we have first candle, second candle, and third candle. You can see there is a space between these two candles. The wicks or the shadow of the two candles are not touching each other, leaving space. So this fair value gap is just like you are painting your room black, but the background, the normal color, the initial color of your room was white. So as you are painting, you are still seeing another white. You are still seeing another white colors. You know that you have to go back to that white color and cover it up with black paint. You understand? You make sure that you paint everywhere black. You understand? So likewise, the market. You understand? That's why it is called inefficiency. Once there is fair value gap in the market, price will always do corrective pullback or price must come back to that place and cover it up. You understand? Price, it might not be immediately, but later on price will come back. That is why when you've seen a high probability demand zone or supply zone, it must have fair value gap. That indicates that price will still come back to that place to buy or sell. You understand? So now I believe you understand what we call fair value gap. You understand? So let's go back to what we were talking about on supply and demand. All right, so so I believe you understand what I call fair value gap. So when you want to draw demand zone, it must be the last bearish candle. You understand? Before the impulse move, you can see first candle, second candle. I only draw these two candles instead of three. You understand? But I believe you can understand it. So the third candle, it must have inefficiency. It must leave space or fair value gap behind. Once you are seeing space, you can know that this is an indication that this zone is valid and you should expect price to reverse back correctively to that zone before buying or selling. You understand? So this is buy scenario, right? This is uptrend. So let's check downtrend. Yeah, all right. So here is the example of bearish trend or downtrend, how to draw supply and demand zone. So here we are on how to draw supply zones. You understand? So as you can see on the chart, you can see we have high here, then we have low. That's break of structure. Then we have another lower high and lower low. So you can see, how do we draw this supply zone? You can see this first, the last bullish candle. You can see the last bullish candle before the bearish candlestick. You understand? So that's the supply zone. You can see how I highlighted or place a box at that area. You understand? So that is our supply zone, and it must have fair value gap, imbalance or inefficiency. You understand? That's, it must have space between three candlesticks. You understand? You can see the first candlestick, the second candlestick, and the third candlestick. They are not touching each other. You understand? They are not touching each other. So this validates the zone. Then you can see price reverse back, price pull back and mitigated the supply zone and broke structure to the downside. You understand? Then after breaking structure to the downside, you can see that the new supply zone was automatically created. You understand? You can see the last bullish candle before the bearish candle. You can see the last bullish candle before the bearish candle, and it has imbalance, fair value gap. It has fair value gap. So this shows that supply zone have been formed. You understand? So how do you draw this zone? You place a box from the beginning of the first or last bearish a bullish candlestick. You understand? You put a box there and you highlight it out. You understand? Then you do the same thing on the fair value gap for you to know that this zone, you are expecting price to reverse back to that exact point and expect price to push down. You understand? So this is an example of how to draw supply zone. I believe you understand it. So let's move to live example on the chart. You understand? All right, so here is the example of how to draw supply zone on bearish trend, on downtrend. You understand? So you can see here we have break of structure to the downside, meaning that we are on bearish trend, right? We should be looking to sell. Then you can see after break of structure, you can see that automatically newly supply zone was created. You understand? Then you can see that we have this small inefficiency or this small fair value gap. Let me zoom it. You can see between these three candles, you can see that there is space in between, which is overlapping with the supply zone. You understand? So this indicates that this supply zone is valid and we should expect price to pull back or reverse back to the supply zone before pushing downward. You understand? Yeah, so you can see after the creation of the supply zone, you can see that price reversed back. You understand? And mitigated the exact point of the supply zone. You understand? And moved down. Sometimes price might not mitigate or hit the supply zone. It will just hit the fair value gap and move down. But the one that is very okay, that is best, is supply zone. You understand? So you can see the creation of the supply zone. It was the last bullish candle. Don't mind the color of my candlesticks. I just like it like this. The blue candle represents green candle, which is bullish candle. Then the black candle here represents red candle. You understand? So you should just copy that. So you can see during the creation of the supply zone, you can see we have the last bullish candle before the bearish candle, and you can see impulse move. Even another fair value gap was there after this tiny fair value gap. You can see another fair value gap is here. You understand? That's imbalance. Price, we have to pull back correctively and retrace back into the supply zone before pushing downward. So seller will get in at this same point, and target the the previous low, the previous swing low. You understand? You can see take profit was it. You understand? So let's check bullish example. Keep your fingers crossed. All right, so here is the bullish scenario on the live chart. You understand? So you can see we have this break of structure to the upside. Then it means that we are in bullish trend. We should be looking to buy, right? And I told you earlier that during the creation or the highlighting of zones or demand zone, it should be the last bearish candle or the last red candle before the impulse move. You understand? But you can see the last bearish candle which we have here. You understand? It is not enough. You understand? It must not be the last bearish candle. It might be the last candle before the impulse move. You understand? The last candle before the impulse move. You can see after this last candle we have impulse move, and it have fair value gap or imbalance overlapping with the demand zone. You understand? So this shows that this is a demand zone. This is a valid demand zone. Then we should expect price to pull back correctively into the zone. Then we should expect buyers to step in, or you as a trader, you should be expecting yourself to place a trade, a buy trade at that zone. You understand? Then you should expect it to break structure to the upside. So this is how to draw zones. So I will end the lesson. Then so in the next tutorial video we are going to talk about something else. You understand? So we are moving small. You understand? So if you have any question, just come into my DM and ask me.